Hello everybody, it's Doc here from OnTheMoneyOptions.com. It is February 4th, 2019. Way to go, Patriots. Just had to throw that in. Tom Brady's the greatest. Today we're going to take a look at our weekly technical analysis. And at the end of this, we're going to take a look at the 75-year Dow. And I want to point out something that I think you'll find very interesting. The first thing I want to look at today before we dive into the internals, I want to take a look at the SPY, particularly in the fact that we've regained the 200-day moving average. This is pretty important, I think, as a benchmark for the market. So we'll have to watch very closely to see whether it can keep this and continue to move forward. Looking at our new highs and new lows, you can see that the SPX is doing well. It's above the +5, and the NASDAQ is doing well at the very bottom. I'd like to see a little more action in the mid caps and small caps there in the middle. I'd like to see, once we get 3 or 4 of these above +5, this is a fairly bullish setup. This is the New York Stock Exchange Bullish Percent Index, and as you can see today, we added another X to the column. Now they put a number 2 in there to show you that that's the first tick in this month, or the first time a tick happened, and it happened in February, so they put the 2 there. What's important to notice is that that X, column of X's, is higher than the previous column of X's, and that puts it on a buy signal. This chart is the SPY Relative Strength Index, and as you can see, we've moved above the 50 level. Again, that's another sign that we're seeing some strength in the market. I'd like to see this continue. You also see at the bottom that the MACD is very close to crossing back above 0. All of these things give us an idea of what the health of the market is. This is the SPY rate of change. This one still sort of got me on hold. As you can see, the rate of change is still below 0 at this point in time. It's negative, but it's moving back towards 0. Be a lot more comfortable with the overall movement in the market if we see this rate of change move back above 0. This chart is looking at the SPX-EW. That's the equal weight index relative to the S&P cap weighted index. And I think it's important to point out here that you'll notice that we've put in a higher high. Although the participation seems a little bit low, it's still, we're moving in the right direction, and a higher high is a good indication that we're seeing broader participation in the overall S&P 500. This, we're looking at the relative strength of the Russell index to the S&P. This is sort of our risk on, risk off analysis. And you can see here we moved up a little bit. We're seeing a little bit of risk come back into the market, which is a good sign. This is a picture of our VIX. The VIX is very low right now relative to where it's been recently. It's at the lower end of the range, near the really close to the 15 level. It's also sort of at the bottom of our Keltner channels, which means that from a volatility standpoint, this is fairly low compared to where it's been in the past, say, year or so. So we'll look to see how this moves going forward, whether it stays here or starts to move back up. This last chart I wanted to end with tonight, I hear a lot of people talking about the bull market's a little long in the tooth, or it's been around for a long time. What I just wanted to show you with this market is that you can see this is a 75-year picture of the Dow. You'll see that from 1950 to 1965, that's a 15-year period, we had a nice little bull move. Then we had a several-year period of consolidation. And then back-to-back, we had an 18-year bull move after that. So maybe we're not so long in the tooth. And one of the real keys about technical analysis, and particularly looking at internals, is they oftentimes give you a picture that's different than what you think you see or what you might hear on the financial news network. So this is important to watch the internals. Try to be agnostic in terms of what's going on in the market. Just take what you've got and work with it. So this is Doc from OnTheMoneyOptions.com saying so long and stay hedged.